joining in and hitting that like button. We got 8 likes already on the video. Be sure and hit that like button when you join in on the live stream. By hitting that like button, you'll get the YouTube algorithm to pick up the video, spread it around for more people to join in. Today we're going to be talking about the flexibility that is now being talked about within the tariffs that are going to be implemented going into the future. Now, this is something that I called out a long time ago, even before Donald Trump was elected president. People said, what do you think about the idea of Donald Trump inflicting all these trade war tariffs and stuff like that happening within the economy? And my answer, my reply to that was, we got to wait and see. We got to wait and see what it is that is actually going to happen, what countries are going to get the tariffs, how much those tariffs are going to be, and then figure out what it is that those countries are going to do to find exemptions, to find workarounds, to figure out a way to avoid the tariffs. And now, when you think about some of the things that have been talked about over the last few months, there is a lot of credible threats. A lot of credible threats that have been deployed out there, and you can see how it is that the markets are reacting to this, how the economy reacts to these credible threats. I was reading articles about how we've had like these record amounts of potash imports and copper imports and all this other stuff trying to do the trade before the tariffs kick in. And this is exactly what they were intended to do. Like, a lot of people say, oh no, man, he's trying to do something for the future. No, he's trying to do something right now, and it's totally working, and that is get the markets to react to the credible threats. Totally works. See, if you really wanted to use tariffs to fix the economy, right? If you wanted to use tariffs, then you just hit them with it. You don't warn them, right? You just hit them with it. But if you want to use the credible threats of tariffs to get people to like literally manipulate people into conducting themselves in a way that is then appropriate for your monetary policy, this is what it looks like. I mean, you think about it, nothing, like literally nothing has really happened yet. Not in any kind of, like, there is stuff that's happened, don't get me wrong, but even like the idea of lumber tariffs on Canadian lumber, I had people like losing their mind. I had people telling me that they're backing off on their bids. They got all kinds of things that are reacting to that information, but yet the actual tariff to lumber has yet to happen, right? And even the previous tariffs to lumber didn't really create that dramatic of a price difference. But people have lost their mind over the idea of it. So when I think about this word that is now being used, flexible, right? The flexible tariffs that are out there, flexibility. See, it's so funny that Donald Trump says no exceptions. These tariffs are going to go in with no exceptions. Well, you know, that's kind of a harsh word. We'll use this word flexibility, right? Flexible. Well, what does that mean? Right? I mean, either you're doing it with no exceptions, or you're going to have a consideration to how much is actually going to happen out there. Major difference inside of it. So I look at the credible threat theory and I think about what it is that's being done right now, and I think, man, the credible threat theory plays out more now than it just about ever has. Those who understand the credible threat theory saw this whole term of flexibility come out, and it fed right in to the credible threat theory. It was like, absolutely it is. Look at how all the people, look how the markets are reacting to the information, right? That hasn't yet really taken place. And now, even with the idea of it taking place, there's already communication that says, hey, we'll be flexible on this. Right? This is how the new economy works. It works off of jawboning, gaslighting, you know, the propagandized mainstream media, and it's working so well. It works swimmingly, right? Like, almost to the point that I almost have to give them a compliment to it. It was like, I didn't think that they would be able to pull it off this well, but yet here it is taking place. I mean, they said that they were going to do it, that they were going to use their communications to guide the markets into the monetary policy that they are looking for. Here it is taking place. I didn't think it was actually going to work, but the two of them are in cahoots, the administration in the Federal Reserve, and they're pulling it off. They're pulling it off. I mean, it's just like, no way. But yet here it is. All right. So as we see the inflationary scenario that is produced from all this, because that's exactly what's going to happen. Everybody's concerned about inflation coming back. They're all worried about higher prices. That's the whole reason why you see these increase in imports of potash and copper and all the rest of the items that are going on out there, is because they're worried about having to pay a higher price for it going into the future. It creates the inflationary scenario that they were looking for, and it totally works for their monetary policy, because now the Federal Reserve gets to stand still, not do anything, and have the neutral interest rate rise to meet them, just like I have been talking about for years now, because this is what the Federal Reserve said that they wanted for their plan. Like, if you watch the mainstream media and you listen to that, and then you listen to the people who regurgitate that information, everything that I talk about seems so far off and lost. Like, people are like, dude, you're the only one talking about that. How could it possibly be accurate? Go and look at some of the videos that I have done breaking this stuff down using the Fed's own words, their own documents, their speeches, the ones that are never communicated and talked about out there in the mainstream, but yet they seem to communicate to each other using these words, using the idea of flexible average inflation targeting, moderately above 2% for some time. You know, all this stuff is communicated within their own communications to each other, but very rarely do you ever see it deployed out there into the mainstream media. And then when it is, it's discredited. That's what I find most amusing about the whole thing, is that you will even find college professors or whatever, economists out there, who will then talk about flexible average inflation targeting, say that the Federal Reserve was shooting for something over 2%, and then discredit that information, say that it's not real, and then go and start talking and communicating about the 2% target that is not the Federal Reserve's monetary policy. Like, they will literally tell the people, hey, flexible average inflation targeting, going for moderately above 2% for some time, then discredit that information and then start talking about a 2% target, which is not the accurate way that the Federal Reserve is going for inflation. And I've seen this so many times. I don't know, like, how many people keep falling for it, but apparently it seems to be like 99% of the people, because nobody's catching on. Somebody said the other day, it was just like, well, eventually they're only going to be able to call wolf so many times. I don't think so. They can call it as many times as they want, because nobody hears it. Nobody's hearing it, right? They're not coming back saying, dude, you're wrong again, or whatever. That's not the case, right? Even go and look at the recent speech coming from Jerome Powell, who talked about the consensus statement. I don't know how many people review the consensus statement, but it's the statement on long-run monetary policy strategies and goals. It's a 5-year plan. Every 5 years, they review this plan and update it. This plan, this consensus view, this consensus statement, is not going to review the inflation portion of it. That means they're going to continue on with the inflation expectation that they had, which is moderately above 2% for some time. They are going to continue with that. When that consensus statement comes out here, I'm guessing towards the end of summer, they haven't got an exact date on it, we are going to find those words in there. And if those words are written down in the consensus statement, I'm going to know that I am 100% accurate on my credible threat theory and everybody else got it wrong. And I don't mean to be cocky or arrogant or anything else like that, but I wish other people would pick up on this, because if they did, the Federal Reserve would fail to be able to the Federal Reserve would fail to be able to continue to provide the economy with their current monetary policy. It would have to change. Now, maybe that's a good or bad thing, I don't know. But I know that most people are not picking up on the credible threat theory, and therefore the Federal Reserve is going to continue to operate the way that they have been. And it's super important to understand that there is a consensus statement out there that is saying flexible average inflation targeting with moderately above 2% for some time. Most people will miss that. They will not get it. And so when we think about these tariffs and what it is that it's trying to do, it's working, because it elevates the inflation expectation. And as people are knowing for sure 25% tariff on all these products coming from Canada and Mexico and all this other stuff, they are now have to use the word flexibility inside of that. how much will it really be? Right? Because the credible threat of tariffs works so well. All right. 10 minutes into it. Whoop, where are you guys going? Oh, get back up here. Okay. I hear confidence in your voice, not arrogance or cockiness when you explain the credible threat theory. Well, thank you, Truckerbot. I really appreciate it because that's really what it is. I am very confident inside of it. I am not trying to be like, hey, man, I'm so much smarter than everybody else. I wish everybody else would pick up on it and try like, I wish somebody would break down the credible threat theory as good as I can and then disprove it. Right? Like, I would love to see that. If that happened, that would actually make me happy. Right? And I know that's really odd for somebody to say. It's like, hey, I want somebody to disprove me. Right? To just say, hey, man, I've gone through the credible threat theory. I can explain it better than you can now, and I'm about ready to break it apart and show you how you're wrong. I cannot find anybody who even talks about the credible threat theory, let alone be able to disassemble it. Right? All right, amazing that everyone jumped at once, or did the phone just fall? Everybody jumped at once. That's funny. All right, ouch. All right. Someone named Jeff Gunlack, yeah, I know that guy, allotted to something like this in an interview yesterday. Yeah, well, where was Jeff? Okay, like, I can't remember exactly what he had said, but I tore that dude apart like 6 months ago, right? And I'm not sure exactly what he was saying, but he was misguiding the people with his statements, and I can't remember exactly what it was. But after that, I didn't trust him very much, right? I don't trust him in that sense. So if he's picking up on this, right, he's too late. It's too late. Like, you should have already have been positioned already. Like, if you're now cluing into it, like if he's now cluing into it, think about all the strategies and everything that he has used up until this point. Either he was lying, misunderstanding, or, I don't know, like, but he was getting it wrong. I just remember that at the time, and I wish I could remember what it was he had said. I did a video on it, so I should go back and look. All right. Simon dropped us on heads. Sorry, guys. I hope it didn't hurt. All right. The threat of tariffs is a great thing for the Fed. It works out, doesn't it? Still waiting for more discounted stock market to add some extra buys. There you go. I feel really lucky to be here. UE is creating history with all his videos about credible threat theory. When the light bulb goes off, UE channel will absolutely explode to 1 million subs. Thank you. I really appreciate that. That's exactly what I was hoping to hear from another viewer out there, because this is not the first time that I've heard it, and this is exactly what I was thinking about what happened with lumber in my channel. I was putting out lumber videos 2, 3, 4 times a week. Not a whole lot of traction on it. 2, 3, 4,000 views maybe. When lumber took off, boom, right? The channel just exploded because I had all this history of lumber information leading up to what was happening, and most people who were missing it, like, they even got millions of views on their channel talking about the hyperinflation scenario taking place in lumber, and all these people were like came to that attention of it, loaded this guy up with 1 million views, and that dude was spreading misinformation, right? I was the only channel that was spreading real information about the lumber industry, and I was super accurate on it. Like, I don't mean to brag it up, I just was. And it's not because I'm some super genius when it comes to lumber. I just happen to be standing in the right position. Perfect location, right? Working retail lumber in the middle of this, in the Pacific Northwest, timber industry. I know mill operations, I know truck drivers, I know other distribution retailers, I know distribution hubs, I know vendors, I know every corner of it. Like, there's no corner of the market that I couldn't see, including the export market, right? Like, for logs, there was no market that I couldn't, there was no position that I couldn't see. Right? Now, I'm not going to be like an expert. There was people who were smarter in any one of those positions, but there was very few people who could see it all at once. Right? And because I could see it all at once, and my understanding of macroeconomics, I could call out lumber so accurate, and I did. Right? So I'm hoping something similar happens with the credible threat theory. I put out so many credible threat theory videos, breaking it down, explaining it over and over again, and I haven't deviated away from it. Like the videos that I had done a year and a half ago talking about what I am seeing with the Fed funds rate, the neutral interest rate, and all that other stuff still play out today exactly the same way. Right? I don't know how many other people can say that the things that they were talking about a year and a half ago in their predictions about what it is that the Federal Reserve was doing, I don't know how many people can say that they were as accurate as I was. Like I said, a year and a half ago, sticking to the exact same theory, never changed, not deviated once. Yeah, let's see here. When it comes to lumber, I trust Simon more than most. Trust the source. Thank you. Yeah, the lumber videos was very interesting. You're showing the cause and effects relationships. Thank you. Yeah, and that's, and that's really, I think having the ability to, like, having studied macroeconomics and then having the ability from my day job to use that macroeconomics view, incorporate that into the business that I am working at, right? That is what gave me the view. Most people don't realize that your day job has more information, more real-time information than any of those economists in their analysis. They are waiting for you to live your life so that they can look at the numbers. They're looking at something that's already occurred. You experience it firsthand. You get to experience it in real time. But most people who are working their average daily job don't have enough understanding of macroeconomics to then recognize what it is that they see taking place within their business or their local economy, to then incorporate that into the bigger macroeconomics view. Those people who can literally get real-time view of the economy just by simply watching the customers come through the door, what it is that they are ordering, how many phone calls they get, there's so much information. Truck drivers, how many loads are they going, where they're traveling to, how much rejection rates are there. I mean, there is so much information that an individual can have from their daily job. If they were to incorporate a macroeconomics view into it, that they could have information in real time way ahead of anybody else. That's the way I did it. That's the way I did it. Okay. All right. The time you hit 1 million subscribers, it's over for the Fed strategy for sure. Yeah, I kind of figured that as well. Like if the channel was that popular, then I think people would then clue in on the credible threat theory, on the monetary policy, and the Federal Reserve would not be able to conduct it or work it like that. It would have to change completely. However, where are the lucky ones? We're the fortunate ones who truly see it, to truly understand it for what it is, right? Us and a handful of central bankers out there, but we're it. Like nobody else is seeing it this way. And since they don't see it this way, we have an inside view that they don't get. They literally just don't get to see it this way, because if you don't know, then you're going to assume something different. All right, can I pay you a percentage to save me money on buying lumber? No, it doesn't work like that. You can't, no, right? You can come in and work it and I'll give you the best deal I can, but then that's that. All right, I can tell you facts about economics won't get through these people, but psychological analysis and identifying their severe emotional trauma and wounds will. The great weakness. Yeah, there is no tariffs. They keep moving the goalpost. Right? Daria gets it. Nice 90s reference too. Let's go. All right, you guys are awesome here. Okay, cruise back down to the bottom. In what ways can we use this understanding to our advantage? See, I think this question, and I don't mean to, because I kind of do the same thing, so please, mastermind, don't take offense to this when I say this, but I think that's an egotistical question, okay? It's just like, because the ego wants to be right about everything, we don't want to screw up, and we want to make sure that everything is safe and secure and stuff like that. So this is what ends up happening when we get the information in. It was just like, okay, so now that I have this information, how do I use it to then use it for my advantage? Like, how do I use it to better my family, better my position and stuff like that? This is really a very personal question, because it's a direct question, but then it comes back with a general answer, right? So you want a direct answer to it, but there is no direct answer without knowing who you are, right? Like, what's your goals? What's your position in life? What's your age? What's your business? What's your, all these what's. So when you have all these different elements of what it is that you have going for you and what it is that you need and what you are expecting in your life, you can't get a general answer. There is no general answer for you, right? The general answer is that you have to internalize it, and then subconsciously you will just be making the right decisions because you already have retained the information. Like once you know it, you can't unknow it, right? Once you see it, you can't unsee it. So when you take this information in and then you internalize it, like how do you know if you've internalized it to the point that you are subconsciously using it? If you can describe it, if you can like dictate it back saying, hey, this is the credible threat theory, this is like, you don't have to detail it out as good as I can, but if you could just kind of explain it, the gist of it essentially, then you have internalized that information. You will just be naturally making decisions using that information, not even realizing that you are like, specifically thinking, okay, what did Simon say on that one video about? Like, you will just automatically just be making the right decisions, incorporating that idea in what it is that's happening out here in the economy. So, for example, when you hear people talk about how the Federal Reserve is going to drop interest rates to zero and they're going to do it because of all these reasons and then labor and all this other market, and you're thinking to yourself, it was just like, well, I don't know about that. All right, because they're actually trying to keep interest rates elevated, trying to go for this, this flexible average inflation targeting, inflation moderately above 2% for some time. So everything that you say inside of this article, going down to a 2% target or taking interest rates to zero, none of this really makes sense, right? But if you didn't know the credible threat theory, you would internalize that going, oh man, I bet you the Fed is going to drop interest rates to zero. How do I deal with that information? Maybe I should hold off on buying a house because the mortgage rates are going to come down, or right? And you start thinking of all these things, right? But then once you understand the credible threat theory and you hear, oh, the Fed's going to be lowering rates or not lowering rates, how did they deliver that information? What did they say about that? Did they deliver that information saying that there's a weakening economy, or is this a general support? Because that information about how they delivered, right, how they delivered the interest rate adjustment, whether they did or didn't do it, right, the actual adjustment part of it, but the information that they delivered with it has a profound impact on the economy. How do we use that, right? Because if you're looking to get a house, or you want better interest rates, or you're wondering if there's going to be a better mortgage rate coming into the future, well, you have to listen to how it is that the Federal Reserve delivered the information. Did they deliver it with an idea that there is a recessionary pressure coming? Or did they deliver that information saying, hey, we're doing this as general support? If it's at a general support, then most likely you were going to see interest rates on mortgages come down. But if they deliver that information saying, hey, we see a weakening economy and tight labor market and issues with that coming up, and we're going to have to adjust rates down because of this weakening economy to try and deal with the recessionary pressures, well, then you can expect interest rates to rise up, right? The action itself, less important, right? I mean, it's important, but 6 months, a year and a half down the road, that's when it's important. The immediate, that's the delivery of the information. That's what's important. So this is how I've internalized this information, right? This is how I've come to the understanding of it. A lot of people out there are like, no, how do I do my stock trades with this? And I'm like, I don't know. You're going to have to figure that part out, internalize the information and do your stock trades. I dollar cost average, right? I dollar cost average, and I buy right through any kind of situation that's happening out there. Whether the market's up, down, or sideways doesn't make any difference to me because I'm dollar cost averaging. Okay? I buy a little bit all the time. So again, everybody's going to do it differently. It's important to understand it in that fashion, that you can't ask a specific question, how do I use this information? Because it's what you're going to get back is a general, broad response that doesn't specifically address the question, right? Okay. Let's cruise down here a little ways. Okay, deja vu. Until Congress changes the vote, the Fed won't change. Yeah, no, the Fed's pretty much I think that they're going to remain independent. I don't care what Trump says or does or whatever, they're going to stay independent. Simon Fed never has said weak economy since 1929. No, they won't. They will never say a weak economy. They will talk about um, like they will refer to like like a drop in aggregate demand. They will talk about tight labor market or loosening labor markets and stuff like that. But you're right. They will never use the word like weak economy. You have to kind of interpret that information. Like, what is it that they are saying about this economy? If the masses operated in a manner with the understanding how this theory works, would the Fed still be able to operate in the way they do? No, they wouldn't. It wouldn't work, right? Because people wouldn't be falling for the idea that they're going for a 2% target, right? Like, how many people are believing that they're going for a 2% target? That's like 99% of the people. If 99% of the people believed that they were going for a 2% average inflation rate, that it has inflation moderately above 2% for some time to make up for the fact that they failed to achieve the 2% target over the previous 10 years. Like, if people were to internalize that and understand it in that fashion, they wouldn't be able to get it done. They wouldn't be able to do the things that they do. It's important that they communicate out there to the people that they are going for a 2% target because it's a 2% anchored, it's inflation anchoring is what they are doing, right? They want to make sure that the people know for a fact that 2% is the anchor. That's the target. That's the spot that they want to be. If they believed anything else from that, then their policy wouldn't work. It would fail, right? They wouldn't be able to keep they wouldn't be able to keep their monetary policy operating with inflation moderately above 2% if the people believed that they were going for it. If they believe that they were going for 2% target, then they can continue on operating the way they do. I know this is confusing, right? I know it is. But it's important to understand that the credible threat theory, if it was to truly be understood by everybody out there within the economy, basically everybody who's believes a 2% target is trying to be achieved, if they were to understand the credible threat theory, it would fail. It would not work. In fact, it's the real way that you can end the Fed. There's no other way of ending the Fed. There's no lawsuit. There's no, there's no organization of people getting together to do something to try and, creating an event or something like that that'll end the Federal Reserve. There is no way of ending the Federal Reserve except for people to understand the credible threat theory. That would end the Federal Reserve. It would end the Federal Reserves in the way that they are conducting themselves today anyway, right? Like, they may still be in existence, but they're not going to be operating like they do right now. But since nobody's really going to understand the credible threat theory, they're going to continue on operating the way they do. All right, uneducated take. It's in the channel name. Okay, hey, Gordon, if you're calling me uneducated, why don't you just go find another place to be, right? I mean, there's nobody asking you to be here if you don't like it. All right? It's not confusing. Government creates money and gives it to people that promise to circulate it, promissory notes. Great Depression 2.0 in 2006, if not sooner. So going for a 2% average over time, what is the time frame? Caveman look, they actually don't have a time frame. In fact, Jerome Powell specifically said that in a speech given August of 2020, where he was breaking down the details of this. He said in there is no mathematical formula for figuring out flexible average inflation targeting. There's no time frame and there's no mathematical formula for figuring it out. Straight up. Like, he straight up said that. Those are his words. Like, I don't have my computer here to read them to you, but you can just go and type in Jerome Powell's speech August of 2020 and then find that speech, and it's probably about 3/4 of the way through that speech. You're going to find it down in there where he straight up says that, that they are going for this flexible average inflation and that they have no mathematical formula for figuring it out. They will not be tying themselves. This is what he said. They will not be tying themselves to any mathematical formula. Okay? And so to understand that the flexible average inflation targeting doesn't look forward. It's actually looking backwards. Right? And I know this is difficult. So I think it was Richmond Fed. Yeah, it was the Richmond Fed, and I think it was 2023 that this average inflation targeting or something like that. It was a paper. And again, if you want to really understand this information, you have to become a member of the channel. That's all there is to it. It's $1 a month. It's the cheapest membership out there. You will get a bunch of member-only live stream videos that I have done breaking down the Fed speeches, talking about the credible threat theory in detail. If you really truly want to understand the credible threat theory, then you become a member of the channel. All right, $1 a month. We add member-only live streams once or twice, a month or so, as the speeches come out and the importance of them comes out. But you can go into there and you can find all the different speeches that I have broken down. But if you go and look up Richmond Fed, and I believe it was August, maybe August of 2023. The month might be wrong, but you punch in there average inflation, targeting or something of that nature, and they have a paper that they have broken it down, and they talk about how it is that they view the flexible average inflation targeting over time, because it's not a forward-looking thing, it's a backward-looking thing. So essentially what they have done is they take the current inflation that we are experiencing and they start averaging it back. Last year, how much was, like, if we incorporate all the inflation we're experiencing today and then we go back 1 year, what was the average inflation over the last year, right? Go back 2 years, what was the average inflation over the last 2 years? And keep going back 3 years, 4 years, right? And just keep going back until they find the spot where the inflation had fallen below the 2% target, right? And they go back until they find the date that it lands at target. Now, I know that's kind of confusing, so we're going to explain it again. If you go backwards, right? So we look backwards from today's inflation, we go back a year. Did we have 2% inflation? No, we had a hell of a lot higher than that. Go back 2 years. Did we have 2% inflation? Nope, way higher, right? Keep stepping it back. How far back do we have to go to find, through current, from the past up until the current date, how far back do we have to look to find the 2% target? Like, where is it that we can go back in time, and what date is it back there that shows all the way through current today where the average inflation came in at target of 2%? So it's a backwards looking inflation targeting. I know that's strange. So now they look back and they say, okay, how far back do we have to look to find a 2% target, right? And now, like at the time of that paper, I think it was like 2008 or something like that. That's how far back that they had to look in order to find that 2% target. This is the way that they are looking at the 2% average inflation rate. And again, I know it's confusing, but that's how they're doing it. And this is, again, coming directly from the Federal Reserve. This isn't me assuming that. All right, what time is it? Alrighty, guys, I got a few more minutes here. Look up Mike Brock's article, The Plot Against America, at Current Events 2021-25, and read about the Dark Enlightenment being fostered on we the people as we speak. All right, hey caveman, that's part of the ambiguity. This is such a hard word for me to say. Ambiguity. Holy, I'm just not going to try. All right, a fuzzy time frame. All right, I'm trying Brody. All right, Truckerbot. Since they look backwards, is that the reason they can never properly avoid a recession? I honestly, I don't know if it's possible to avoid a recession in any way. Like, I don't think that's possible. I think a recession is a naturally occurring thing that's going to happen within the economy, right? Depressions and recessions and slowdowns, like, you have cycles of economic growth and fall, booms and bust cycles. So I don't think there's anything that can be done to prevent a recession. There's only things that can be done to try and smooth them out so that they're less impactful, but they're always going to happen. All right. Try considering it through the lens of how you can take responsibility for yourself and people you care about. Big dog. Yeah. All right. who's back up here. Okay, what did you think of Powell's propaganda Wednesday? What, the speech that he gave? Is that was or what did he do on Wednesday? I mean, I'm not sure what the difference was. I mean, outside of what I kind of expected coming from him, I mean, the only major difference that I saw taking place within the adjustment of the monetary policy was the reduction of the roll-off on the balance sheet. So that should provide, I would assume, a little bit more liquidity to the markets out there, as the Federal Reserve is not allowing as much to roll off the balance sheet. So they're like reducing their quantitative tightening. So that was kind of a big deal as far as balance sheet adjustments go. And then Christopher Waller was the only, recent, the only one who didn't fall in line with the rest of the FOMC. But outside of like that adjustment to it, and then, basically the delivery of the information that says, hey, we're in a wait and see pattern, I'm not sure what it was that was stated in there that gave any kind of major like difference to the economy or to the markets out there. To me, it was like a very cautious approach to the consideration of what it is that's going on out there, with the idea of uncertainty constantly being thrown around. To me, that's just like, that leaves it very open-ended for them to then use their propaganda machine at some point here, like in the next few weeks, then deploy information that will then start guiding the markets in one direction or the other. So keeping it open-ended like they did, I think, is probably part of the technique of the credible threat theory, or at least, the jawboning and forward guidance, or whatever it is you want to call it. But I think that's part of what was happening here over the last few weeks, is that they are going to keep it like non-committal, not committed to anything. What needs to happen in order for Trump to reconsider his tariff policies? What would need to happen? The neutral interest rate would be achieved. Like, the Federal Reserve can stand still and the neutral interest rate will be met, and then their Fed funds rate will neither be accommodating nor restricting the economy. If Donald Trump wanted to actually create a situation in which that the Fed funds rate would be somewhat stimulating to the economy, then he would just keep pushing the inflation expectations through tariffs. I know this sounds strange. Like, most people would be like, dude, that's going to slow the economy down. No, not unless you actually implement them. If you push the credible threat theory, right, then what's going to end up happening is that they are going to be pushing the tariffs, the idea of tariffs. It creates an economic environment very much like what we were experiencing. Think about how many people brought in potash, how many people bring in copper, right? These are just two articles I was reading this morning about it, that these people are now increasing their economic activity based on the threat of it, right? So now what ends up happening is that with this threat, or the idea of a threat, is it increases the inflation expectation. If it increases the inflation expectation, it'll raise the neutral interest rate, which makes the restriction on the economy less. So now here you have all this stuff that's coming in, trying to beat the inflationary pressures from tariffs or whatever. You got all this stuff that comes in. At the same time, the restriction on the economy becomes less, right? Because the neutral interest rate rises. Now, if you don't actually inflict a tariff, or if the exceptions or the flexibility of how impactful these tariffs really are, then what you might end up having is a bunch of stuff that's come in, right, trying to get ahead of the tariffs. At the same time, the neutral interest rate rises on the inflation expectation that is elevated. The economy becomes less restricted, and economic activity starts to take place as people feel less threatened by the tariffs, as the flexibility starts being pronounced, or whatever out there, starts being pushed. The tariffs are to absorb some of the euro dollar printing from our trading partners. And see, now this is something that I kind of considered as well, right? To try, like the idea of trying to bring dollars in back into the United States, like get it away from outside the nation. And to me, like that's exactly opposite of what it is that the Federal Reserve would need for their policies themselves, because they are really conducting two policies: the United States monetary policy, and then you got being the custodian of the world reserve currency. So at some point, the world demands dollars. How do you get the dollars out there to the world? Now, if you have all these tariffs and the threats of tariffs and all this other stuff, and then you have a bunch of counter tariffs that are put on you, and then you don't tariff those people, what ends up happening, right? Even more money ends up leaving the United States because those counter tariffs are put onto us. You see what happens? This is a way that we could actually get dollars out of the United States without having to figure out a way to do it. Because really, ultimately, if you go and you look at Triffin's dilemma, which is, Robert Triffin was an economist from back in the day, right, 60s or something like that, who figured it out that if you were going to be the custodian of the world reserve currency, like, the United States is, then you have to run trade deficits, meaning you have to import stuff and to export the dollars. Well, what if they could figure out a way to export the dollars without actually creating more trade deficit, in the sense that you need to keep buying more and more stuff? What they could do is just tariff the hell out of you, and you can just export the money on the stuff that you're already importing. Does that kind of make sense? I mean, I know that's probably way far off of a concept, and I can't find anywhere that's proven, but I do know that the Federal Reserve has communicated many times that they got to figure out a way to get money out of the United States. And part of that communication was the idea that the Federal Reserve could literally buy the debt of a foreign nation out there, like buy the bonds of Italy or something, and then put that on their balance sheet and then send money right over to them in that fashion. What time is it? Oh gosh, guys, I gotta call it quits here soon. All right, credible threat theory, as explained here, assumes increased inflation expectations don't have real world effects. No, that's not true, right? I'm not saying they don't have real world effects. That's not true, right? And it's harmless for inflation expectations to come untethered. No, that's not what I'm saying at all. You are completely misunderstood the credible threat theory, but that's okay. Try it again. That is not true. That is not true. I did not say that they are harmless, right? I didn't say that. Not one single time did I ever say that they were harmless, right? So that's incredibly not true. And the inflation expectations to come untethered, they don't come untethered, right? The Federal Reserve would love that. They would love for it to become untethered, then they wouldn't have to try and figure out how to do it. You think about it. They created how much money during the Great Financial Crisis? A balance sheet of $850 billion to over $4.5 trillion, and failed to produce the inflationary scenario that they were looking for. Why? Can you explain that? Like, I can explain it. I know why. But most people who look at the Federal Reserve and the money printer causing inflation cannot explain how it is that quantitative easing 1, 2, 3, and 4 failed to produce the inflationary scenario that they were looking for. You think about it, it was an expansion of the balance sheet of 4 times. 4 times. This last round of COVID, quantitative easing during COVID, doubled the balance sheet. The Great Financial Crisis was 4 times, right? Way more on a percentage basis was printed during the Great Financial Crisis than was printed during COVID, and it didn't produce an inflationary scenario. But yet, all the money printing from the Federal Reserve created inflation during COVID. What was the difference between the two? How come it didn't work back then, but it worked this time, right? So, again, if you understood the credible threat theory, all of it makes sense. All right. Easier debt service. Okay. Sorry, I don't mean to blast over you. I'm just not sure what your conversation is about there all night. Okay. Every new presidential administration or so, a new way to ship money out of the U.S. is devised or used, it seems. Yeah, I agree. No one said they do, beloved. All right. He literally just said that. Quantitative teasing. No, you didn't. You misunderstood something. All right, it's the Cantillon effect. They could stimulate the economy because the middle and working class don't have money. Banks are a form of credible threats. Well, they can be. I meant to say. Okay, what is this one? Interest rates are not a stimulating instrument. They play more as a warning indicator. Yeah. Well, yeah, and I can kind of agree with that because really, if you think about interest rates being close to zero or near zero, is actually a deflationary concept because the return on capital investment goes to zero or even negative when you consider if there's any kind of inflation expectation that's incorporated into it. By having a return on your capital investment that's near zero or close to zero and it can't beat inflation, then essentially that is a deflationary economy. So yeah, I kind of agree. Interest rates are not, like lowering interest rates isn't exactly a stimulating effect. I mean, it can be in a very short term, but the long term it's not. All right. Flesh it all the way out before you claim he's wrong. All right. Wait, is somebody trying to if somebody's trying to claim I'm wrong, then they obviously they are assuming, they are misunderstanding, and they have not gathered the entire information. Anybody who has broken down the credible threat theory, or if I have broken it down for them and I've explained it to them and I've shown it to them, there's not a single person that I have found that disagrees with it. Not a single person. Once they see it, they're like, wow, man, I get it now. I really get it. And so I know it's accurate. I know it's right. I mean, again, I don't want to be cocky or arrogant or anything, but this is the information that was delivered directly from the Federal Reserve to the other central bankers out there. And why it is that, me being in this broken down old car or whatever, went through all these speeches through all these years for 20 plus years, right? Gathering up all these little pieces of documented information coming directly from the Federal Reserve so I could piece it together and show it to you. There's nobody else who's done that. Like, I mean, I don't know, maybe if you read Ben Bernanke's book, or something like that, maybe he explains it in there. But other than that, like, I can't find anybody out there who even remotely comes close to what it is that I'm doing. Like, doesn't even come close. So if you can put it all together, explain the credible threat theory better than me, and then disassemble it, I would love to see that. Go for it, man. All right. Uneducated Economist, you guys let me know.